Good morning, everybody. It is the end of February. It's hard to believe, right? Almost 1 year we've been stay at home, and our Community Together show for the Conejo Valley has been super successful, and people are coming back to us and asking us to bring on some special guests because there's a lot of questions in the community. And I'm super honored today to have a friend and a colleague with us today. And he's David Marton with Marton and Associates. He's a local CPA. He's from Agora Hills. And David, welcome. And go ahead and let's introduce yourself a little bit about your background and how long you've been doing it before we get started. Thank you for being here.
Thank you, Lydia. Thanks for having me on. I've been practicing in public accounting now for 27 years. My office is in Agora Hills. We specialize in startup to $10 million companies. With mostly closely held, nothing publicly traded, and we also do a lot of individual returns and help a lot of people in the community just like you.
Yeah, and you're super local in the community, and I would imagine in 27 years taxes have changed quite a bit, and certainly in the last year we've seen a lot. I know I'd love to just get started because I know a lot of people have a lot of questions, and we've gotten some questions up front. And I think most people are wondering what's going on with tax due dates. Is April 15th still going to be on the agenda this year, or are they going to push it back like they did last year?
As far as we know at the moment, the tax deadlines are still March 15th for corporations, partnerships, and S corps, and April 15th for individuals, C corps, and trusts. I don't expect that they're going to push back the deadlines. Last year was the first time that I'm ever aware of in history that the IRS and the state of California moved back their deadlines. Obviously, it was unprecedented times, but so far they're telling us that they're not going to extend the deadlines.
So corporate March 15th, personal April 15th, and everybody should really just plan as normal, right?
Correct.
So let's talk about working from home. Everybody's been working from home for the last year. What kind of expenses are people able to write off if you're a W-2 employee, and then also if you're not a W-2 employee?
So under the Tax and Jobs Creation Act in 2018, there actually are no more unreimbursed employee expenses if you're a W-2 employee. So if you've been working from home for your employer, there's really nothing you're allowed to write off. Now your employer could choose to reimburse you for some expenses that you may have incurred, office supplies, telephone, maybe even some electricity or something. But generally speaking, for federal income tax purposes, you're not allowed to take any deductions. California differs, and California will allow you to take unreimbursed employee expenses. So you can have a federal California tax difference. If you are an independent contractor, then and it's your primary place of business that you regularly see your clients at, then you can write off some of your home expenses. It will all be based on square footage of your home and what you're using. And the space has to be used, the IRS defines it as exclusively and regularly for business. So you have to be very careful. It can't just be my part-time office / reading room. It really has to be your office. There's been many cases over the years where the IRS has come in and actually inspected people's homes and seen that in that home office, they've got the Peloton and the treadmill and, a couch and a reading, and they disallow the deduction. So if you are going to take the home office deduction, you really need to make sure it is your home office, that it's the place you exclusively see your clients and regularly see your clients.
So given that, a lot of people have had to build out offices in the last year, right? I mean, there's a lot of been home improvement. People have been sitting at home and they're like, I need to carve out an office. Is that tax deductible if you're trying to make a space? Like what kind of home improvements are tax deductible if you're working from home now?
So I'll answer that in two parts. One is if you're a renter. If you're a renter, the improvements actually belong to the homeowner, not you. If you own your house, you may not want to write them off and just capitalize them. The reason being, if you start taking and using your home as your office, if you ever go to sell your house right now, you as a single person have a $250,000, or if you're married, $500,000 exclusion. If you start using part of your house and say 20% of your home is now used for business, now upon selling your house, you have to recognize 20% of the gain as a business gain. Generally speaking, most people will already get to write off their property taxes and their mortgage interest. So what we're really talking about is maybe some homeowners insurance and a little bit of utilities, which really only generates, generally speaking, for most of my clients, maybe $1,000 to $2,000 of additional write-offs a year. And at most of their tax brackets, they're only saving $600-700 a year in their taxes. Versus the backside, when they sell that house, if they said 20% of their house is used for business, now $100,000 of that gain may be gone. And the tax on that $100,000 gain could easily be $35,000 between federal and state. And so from that standpoint, how many years do you have to save $700 to make up for losing $35,000 in tax savings at the end? And generally, most people only stay in their house 7 years. So if people are not staying long enough to really get the benefit, it's probably better that they not write off the capitalized improvements. And again, it also has to be their regular and exclusive place of business.
Yeah, so it's kind of like the short-term gain versus the long-term thinking, right? It's not necessarily a great short-term gain, is what you're saying. And be very careful, and of course, talk to your professional to make sure that what you're doing. Ask the question, of course, but probably don't count on it, is what you're saying.
Yeah, I'd also like to add though that a lot of people have been doing solar and other types of improvements to their house. They just extended you can write off 20% of the cost of solar in 2020, and it was supposed to drop to 22% of the cost of solar in 2021, but they've just extended it back to 26% for 2021 and 22% for all years after. It was supposed to expire completely in 22 and after.
Yeah, solar is a whole nother topic. And do you see a benefit? I mean, I'd love to hear. Do you see a benefit for solar?
It's hard to say. It depends how long those panels last. I do know some people have had a problem if they lease them, selling the house, that the new buyer has to assume the lease. I've also seen if they own it, technology is changing so quickly. Generally, those panels are probably good for about 10 years. And if you pencil out what it would cost you in electricity versus what you save in electricity and what the panels cost, to me, it almost seems like a break even.
Yeah, I mean, we say the same thing when we sell houses, right? Is if you're gonna be in the home for a long time, we definitely say then it's probably worth it and buy it out, right? But the lease is always, it makes you stop and think about it because it's another monthly payment. Even though it's your electricity bill, you still have to qualify for it when you do go get a loan. So yes, I agree with
Additionally, I've also heard of problems where the roof leaks and roofers won't touch the roof. They have to actually have someone come and disinstall the solar, fix the leak, and then reinstall the solar. So for that reason, I'm probably not so big on solar as a fan. But I do know I have clients who love it, and I have clients who have spent $100,000 putting solar on their house.
Yeah, I mean, I think the whole go green, everybody's trying to go a little bit more go green. And I think solar companies are being better about roof inspections and roof tune-ups and new roofs being recommended to put on, but totally a different conversation. So yes, solar could be a topic all on its own on this show. Let's talk about PPP loans. A lot of people got them last year. What is tax deductible? And then there's a new round of PPP loans. So there's a lot of information around PPP loans, but go ahead and give us a good summary on what's going on.
Well, PPP has been a challenge for our office, as I'm sure for every CPA locally, as they keep moving the ball on us. From initially when they put out the program, you had to use 75% of the proceeds for W-2 wages, and they had to be used within 8 weeks. They subsequently dropped it to 60% in wages and 24 weeks. They retroactively changed the loan documents for everyone who signed under the old so that they were qualified to either do 8 or 24 weeks, whatever was best for them. Recently, on December 28th, the IRS came out because there was some controversy about would it be taxable or non-taxable, because it was supposed to be a reduction of your expenses. And in the first time ever, the IRS actually gave you the best of both worlds. You got the money and you didn't have to reduce your expenses. So it is literally tax-free money at this point. California, as California does many times, did not originally conform and was pretty adamant that they would not conform to the forgiveness, that they felt it was double dipping. This Tuesday, Governor Newsom signed into law a reduction. So California will now conform to up to $150,000 of PPP loan forgiveness. So originally, federally is unlimited. As long as you spent the money appropriately, you're fine. And so if you got $1 million PPP loan, you would be walking away no problem for federally, but for California, you could have a $1 million tax liability. Now they've changed it, and so California will only forgive the first $150,000, is my understanding. We're still waiting for the final regs to actually be able to read through them. But my understanding is in the same scenario, now you would have to pick up $850,000 of income in California. So you're going to have a federal California difference. This is not unusual. There's a lot of tax law that the state of California does not conform to federal. The last time we had a major conformity was 2015. And I don't see them changing from this. I do believe I read about 85% of PPP loans were under $150,000. So this should encompass most small businesses, and large businesses will unfortunately be dealing with some taxes in California.
And most of our viewers are, we really are all about shopping local and small businesses. And you and I both, my specialty is obviously with individuals who own small businesses. Same with you, right? I think that Conejo Valley is strong when we think about the small businesses here in Conejo Valley, the restaurants, the retail shops, the service businesses. Let's hope that they can all survive, and this will help them survive, right? Having income that they were able to keep their employees on, which was super important, right? That the government did that. And now that it is potentially will be tax-free money. Now there was a second round that came out, different qualifications, right? And I don't know, did that application end, or can people still apply? Do you want to talk about that a little bit?
To my knowledge, it's still open and able to be applied for through your local bank. Your local bank is really the gatekeeper in determining if you qualify or not. But my understanding is you have to show a 25% reduction in sales from any quarter in 2019 to 2020. And if you do that and you submit the correct paperwork to the bank, you may qualify for a second round of PPP. California has not come out and said, though, if the $150,000 forgiveness is a one-time thing or if it will be, once per year, once in 2020, once in 2021. Hopefully after that, everyone gets their vaccines and we can get back to normal and there won't be a third round of PPP. But, we'll have to wait and see what happens.
What about if they were down one quarter, but then they had stronger year? Will they still qualify?
They're only looking at the one quarter. All you have to do is you had a bad quarter in any quarter. And I think a lot of people could probably prove that they had a bad quarter in April through June when we were in the lockdown. And then a lot of people recovered. We had some clients who had their best year ever. And we had some clients who unfortunately are just, barely hanging on or even out of business, unfortunately. It seems like the restaurants and retail are hit harder than professional services and, people who work in office buildings. It's just, we're not out there shopping and spending money and eating in restaurants. And those businesses are really the ones that this should be targeted to, and they deserve the help.
Agree. And we always encourage gift cards, takeout restaurants, whatever we can do to encourage. We want these restaurants to survive in our community. We want the retail shops to survive in our community. And we're all like, we want the employees to be employed. And so from PPP with the employees, what's going on with unemployment, with that the unemployment wages and the new $600 or the new package. So everything from last year, the employees that did file for unemployment, is that tax deductible for them? And then what about the new stimulus package?
So unemployment benefits are taxable for federal, but not for California. Again, one of those federal California differences. I would recommend for most of my clients that, they probably need to have some federal withheld, because if they got back to work or they were working before, those unemployment benefits don't have any taxes generally taken out of them. And some clients are in for a rude awakening when they file the return. And, I have some clients who, got 20,000 plus of unemployment last year, and with no withholding. For California, they're fine, but for federal, they're getting surprised with tax bills. As far as the unemployment stimulus money, on Tuesday, California approved that anyone who makes under 30,000 will be getting a $600 stimulus check. I believe in the next 6 to 8 weeks, as part of that bill with the PPP forgiveness. We are also working on a bill federally for perhaps up to $1,400 more of stimulus with potentially the same kind of income limitations that we had before. There is some talk to lower them. The Republicans are looking maybe to lower it to $50,000 and $100,000 limits in order to qualify for the stimulus, but that's yet to be determined at this point.
What about, there was all that talk about people who got the unemployment, they didn't want to go back to work when the restaurants got them back to work because they were making more money on unemployment versus, obviously minimum wage is a big issue in California. What's your take on that?
So if the employer offered you back your job and you declined it, because people were very worried about this with their PPP loans. If you document that you offered the job back to the employee and they declined to come back, you were allowed to go hire a new employee to replace that person and not have it affect your retention of employees for your PPP loan forgiveness. That being said, technically, if they decline the job, they may not be eligible for the unemployment benefits and the additional federal unemployment that was offered. I'm not quite sure, honestly, how they would police that. The EDD's having enough problems, as we're all aware of in the news, getting the money out there and all the fraud. I believe I read there's been something like $9 billion of unemployment fraud. People in prison, people out of the country, out of state, collecting California unemployment. They keep trying to tighten the reins on it, but it just seems to be out of control still.
It happens so fast, right? I mean, just the execution of it happens so fast that, of course, there's going to be always those people who take advantage of it in everything. But this is a big number. That's a big number that you just mentioned.
Yeah, unfortunately, we've seen the best and the worst in people. We've seen people giving food out of food banks and helping out their neighbors and family and friends. And then we've seen other times during this pandemic where people have not taken the high road. Let's just say that. Yes,
we have seen that. So there's a lot to talk about. There's Prop 19, there's estate tax laws. So, kind of what other things would you want to share right now with the community and people who are watching on taxes? Or what do you want to share, that a lot of questions that you're getting?
Well, I think something that's probably, of interest to both your clients and mine, we've seen a huge refi boom this year. Rates have been historically low. When they're going in to do their tax returns, one of the things they want to make sure and let their accountant know is if they paid any points on their refi. If it's the purchase of a home, the points are fully deductible in that year. If it's a refinance, then you have to amortize the points over the life of the loan, which basically in English means, if you paid $1,000, and it's a 30-year loan, you get to write off 1/30th every year until you use it up or refi that property again. Additionally, some of our clients who have been in their loans for a long time, if it was prior to 2018, the limit was $1 million. If they did anything short of rate and term refis, now the deductibility for the mortgage interest is $750,000. So if they are refining, we want to make sure that they do nothing more than rate and term, or they may be dropping the amount of mortgage interest that they can deduct. Both items are kind of key to clients looking to buy houses and sell houses and refi houses, and I think all that's very important to remember.
Very good point. I agree with that. Very good point. Yes.
And then the other thing I was going to mention too is there was no required minimum distribution from retirement accounts in 2020. And additionally, as a way to help people through the pandemic, the government allowed you to pull out $100,000 penalty free if it was in order to pay for pandemic type stuff, which could be loss of job, could be PPP stuff. PPE stuff. There's a lot of things. You have the option to either pay that money back over a 3-year period, or you can just take it as a distribution, not subject to the 10% early withdrawal penalty. A lot of clients, I didn't have very many take advantage of it. Fortunately, most of our clients had some rainy day funds that they could get through this period. But I do imagine I will see one or two. I did have a lot of clients, though, who gave up or forgave, they didn't take advantage of pulling out their RMD for the year because they wanted to let the money continue to grow tax-free. And as we've seen, when things first went crazy, the market tanked 37%, I believe, at the lowest point. But by the end of the year, we had recovered all that plus a lot. So the people who did not take their RMDs for the year actually fared much better than the ones who did pull out money. The money keeps growing tax-free for them.
Yeah, I mean, who knew that COVID would have made this economy, make the real estate market like the best year ever? The stock market continues to go. I mean, it just defies all common sense when we sat here a year ago and all went home, right? It just, who would have known? But there are definitely people in trouble. There are businesses in trouble. And, we certainly are here to support locally. What can we do to help all those people? And I love that there's some tax benefits for the people who got the PPP. There's still a PPP in place for small businesses because there are people struggling. There are people who had a great year, but there are people struggling. And I think that's important, that we like to always talk about Conejo Valley and keeping Conejo Valley strong and looking at all ends of our spectrum, people who are successful and people who are struggling. A lot going on landlord and, tenants not paying their rents, and that being extended. I know just from a landlord perspective, because we work with a lot of landlords, is there anything you're seeing from a tax, from what a landlord can do for rents not being paid for the last year?
Unfortunately, not much. They're just out the rent, and hopefully when the moratorium's lifted and people can get back to work, they'll get their back rents. That's more of a legal question than an accounting question for me. But
you can't deduct that they didn't get the.
No, they don't deduct it if they didn't get paid. So the first month of the pandemic, we had a client who had 17 rental properties, and all but one paid their rent. And 3 months later, he had 16 people not paying their rent. It's tough. You want to believe that people are good and will ultimately do what they can. There are some programs out there, I think through LA City, where they will pay partial rent for you, and as long as you pay, I believe it's 20 or 25% of your rent, the landlord can't go after you for the remaining balance. So you pay a little bit, the city pays a little bit, and the landlord eats a little bit. But I would check. It's very much city by city, county by county.
Yeah. All right. Anything else you want to add?
That's all I've got, unless you have a specific question.
No, I mean, a wealth of information. There's so much information, and thank you for being with us today. So, we've put your contact information up, your email and phone number. If anybody has specific information, please reach out to David. He's a wealth of information, and obviously staying on top of trends, working with individuals, small businesses, partnerships, corporations, from $0 to $10 million. So, local community member, loves participating in the community. So thank you so much for joining us today. And hopefully, we've helped, some individuals out there answer some questions.
My pleasure. Thank you for having me.
You bet.